Kitco Mining's special coverage of the Mining Investment Event of the North is brought to you by West Red Lake Gold Mines.
Hey everyone, welcome back to Kitco Mining. I'm Jeremy Saffron, coming to you on location at the Mining Investment Event here in Quebec City. Now, gold is holding above $3,300, silver trading over $34, and investors are watching closely to see which producers are positioned to capitalize not just on price action, but on cost control, asset development, and of course, operational discipline. Now, one game in focus is New Gold. The company operates its Rainy River mine in Ontario and New Afton mine in BC, and has been working through multi-year turnaround, streamlining its portfolio and pushing forward with expansion at both sites. Today, of course, we're joined by their CEO, Pat Godin. Nice to meet you.
Nice to meet you too.
Yeah, good to have you here at Kitco. We just talked about that price of gold, $3,300, obviously. Your share price is up 67% year to date. I mean, it's been a nice little upside for you there. What does it look like as a miner with $3,300 gold right now for you?
Oh, you know, it's way better than otherwise. You know, I'm always trying to remind to my colleagues and my teammates that gold price is not making good miners. Yeah. But you know, I remember in 2000 I sold gold at $247.50. So to be at 3,300, you know, we all fully appreciate that, and I think that it contributes largely to our share performance. But also, what contributes also to our share performance is because we develop the trust. We deliver our project on time and on schedule, and also align with budget. And also, we are pretty good to respect our guidance forecast. So basically, we're showing upside. So looking forward, capital will deplete. Yeah. The AISC will decrease because we will less sustaining capital, and also we'll maybe discuss about the cost management, and we'll produce more metals because at both sites we'll increase the gold production will be at 300,000 ounces per average for the next 3 years at River and River. And at New Afton, we are ramping up season. At the end of this year, we'll be at 16,000 tons per day. Next year, the metal that we will release will be 100,000 ounces of gold and 100 million pounds of copper. So we're becoming more. We start to harvest all the fruit of the last year, all the effort that the teammates made in the last year to crystallize that.
Well said, Pat. So with this, $3,300 gold plus, I mean, we almost hit $3,500 on the spot side. Obviously, you're able to reinvest into Rainy River and New Afton. Tell me a little bit about that. First, start with Rainy River and the costs and what you're seeing there.
So at Rainy River last year, we renewed mostly what we mined. So it was interesting with the phase 5. Mm-hmm. We also this year it will not be a slam dunk, Rainy River, but we need to grind. But it's a mine that is having, up to me, a nice future. We're investing $13 million US this year in exploration, and we will to extend the open pit mine life by a year again. So we were looking at this with value creation with new resources, and also we are drilling underground to extend the mine life, but mostly also to increase the NAV because we have possibility to increase the grade and to bring more high quality ore in the feed. And for the first time since this mine was open, we'll initiate exploration work on the property. We have a package of 50 kilometers of claims along the geological structure. We'll start to deploy time and effort this year because at the end of so keep in mind that we are in Ontario, a nice jurisdiction to mine in Canada. We have strong social acceptability. We have a mill that is performing extremely well now. We invest a lot to increase the reliability of the mill. Metallurgically, it performs extremely well. We have motivated people. The fleet is paid. So we're seeing that on the ways, okay, the risk at Rainy River is to build a tailings storage facility. I have an empty pit now. Can I maximize this value for shareholders? And it's what we're looking at.
You mentioned timeline there. What is the timeline for meaningful underground development over there?
But actually, we are developing the underground mine. So we are mining Intrepid and we are developing main under the pit. So we break through in the pit with the ramp called the ramp portal at the beginning of April. We will connect the ventilation loop that is critical for us in few days. A ventilation system will be commissioned at the end of this month. We want to ramp up the underground production to 5,500 tons per day at the end of 2026, beginning of 27. So we have a contractor in place, and everybody is motivated to achieve the objective. So we are ramping up the development. we want to achieve 35 meters of development per day.
Okay.
We are mostly around 26, 27 actually. So everything is progressing as not. So we need to grind. So
it's starting to go. Okay, you brought up New Afton. Of course, we got to talk about that asset. You have the C-zone expansion that's taking place, and obviously we know copper is kind of an upside to that story as well.
Yeah, but New Afton is 70% copper, 30% gold.
Yeah.
And no, we are. Last year we mostly renewed 2 times what we mined during the year. So, but we extend the mine life only by a year because we increase the throughput from 14,500 tons per day to 16,000 tons per day. We deploy a lot of time and effort, initiative, in technology. So, we have the high-speed internet on the ground. We can operate 3 screw tram with 1 operator from surface. We deploy effort to have an integrated operational center. So the automation will facilitate our life, and it increased the underground capacity to 16,000 tons per day to match the mill capacity. So it's a huge improvement because it's reducing the ASIC. Yeah. It's a demonstration how the technology can change a lot of things in mining. Yeah. So it's positive. I think it's an excellent return. And so following that, we discovered the key zone target at the end of 2023. At this target, we invest mostly $15 million US last year to develop that from a new drift and on the upper zone. So we'll complete the development of a new drift this year to be well positioned to drill. At the end of June, we have 2 drills operational. Actually, we'll have 5 drills at the end of this quarter. At the end of June, we will drill 58,000 meters just to define key zone. Right. To have this in the indicated resource category for year-end, with the ultimate objective to have another C potential. Our dream is to have another C zone with key zone, and to have this in a feasibility study in 2026.
So what could that do to extend the mine life? I mean,
our vision is to bring New Afton beyond 2040. Wow. It's our team objectives. It's a mine that is first mostly all electrified, so we're not dependent of the fuel. We have a mill that is pretty efficient and versatile. We invest when we build C-zone in a ticket tilling plant. This investment will be, we don't need to reinvest for key zone and hanging wall or D zone. But this investment also, we are backfilling the Afton pit, and when C-zone will be mined out, we have room for another C-zone. So basically no capital and no landscaping impact. Yeah. So it's significant. We are the only block mining company who is having a block caving in Canada. We developed the expertise. Our people are extremely motivated. We developed this pipeline of talent. It's a residential mine that is wonderful. It's wonderful for a family to live in Kamloops. It's gorgeous. Yeah. And so we bought back teachers this year, the last tranche of 19.9% of free cash flow, because we see a lot of upside in this asset. And we strongly believe that with a bit of effort, the drilling bit is adding a lot of value to our shareholders, and we want to maximize that first.
Talk a little bit about, copper's back in the headlines, mostly because Ivanhoe, Robert Friedland's mine, it was flooded down in the DRC, and I think it's come back online about 50%, but it's brought a lot of attention to the supply and demand issue with copper. Going into the future, allegedly, there's a lot more that's needed than the current market has. Is it just a nice little upside there?
Yeah, so I strongly believe that the copper price, the demand will increase. Yeah. The problem is when. It's true because with the precedent administration in the U.S., they were more aggressive in terms of electrified transport and etc. With this administration, they have a different vision. I will not say that it's good and bad. It's not to me to judge, but it will probably slow down certain major investment in infrastructures, because it's not only the cars. It's all the grid that need to support the car. And also we have global warming. So you saw the fire that California faced last year. So going forward, probably all the power line will be buried, needs to be copper. Yeah. So all these factors will influence. It's difficult to permit a copper mine. Yeah. It's expensive to build a copper mine. So naturally, I think that the copper price will improve. But the question is when.
Yeah.
So
well said. And I mean, that's what people are talking about right now. I mean, you've been in this a long time. Right now we're seeing the governments, including Canada and the US, start to have more narrative about critical minerals opening up, maybe some licenses, some getting permitting being a little bit expedited. Are you seeing more clarity or support from government on timelines, or is that just in the news now? Are they actually doing it?
yeah, no, I would say that we have some government who are more aggressive. I can say that, and I can say that in our case because we're active in Ontario and in British Columbia, and I'm sure that the new Premier of Canada too. I'm seeing more engagement from the politicians. The fact is, if you have to present the project, actually, the main issue that we're facing as mining industry is the capacity of the government to review what we present and to comment and to provide feedback. So if it's difficult for us to attract talent, it's also difficult for the government to attract talent. So that's one thing. Certain aspect of this, the government in Ontario, by example, they can maybe rely on consultant instead to rely on them. But it's always important, I think, that the government is having the last word to say when it's the time to approve a permit. So I think they want to do this, but I think that the back office should be structured to support the expectation.
Yeah, agreed. Sometimes too many chefs in the kitchen.
And also we have to consider one thing that is important, because we had recently some judgment that support this. The First Nation, they're having their word to say.
Yeah.
And for sure, you have maybe some way to speed up the process, because if it's not adding value to us, it's not adding value to them too, because the reconciliation, up to me, is passing through how we're going to work it out together.
Right.
I think the best way to reconcile is to work together. But at some stage, I think we cannot skip their approval and their consultation process.
Yeah, well said on that side. I got to ask you about the shareholder return strategy, because you've said in past calls that obviously returning value to shareholders is a top priority. I mean, at these levels, are you looking at, you get higher gold prices, are you looking at, some buybacks, some dividends? What's on the table to kind of bring that back to
so if we stick to the plan, so the consensus price in the next 3 years, including 2025, we'll generate $2.2 billion of free cash flow. The spot, it will be probably higher than that for sure. Few things. So I think that to create value for shareholder, we talk about exploration, exploration, and also to support the investment attached to our discovery. I think it's something that shareholders will support. But I always keep in mind that it's not my money; it's shareholders' money. If we cannot provide a plan, to grow the business and to provide to them the expected return they want to have, we'll have to find a way to support them and to return a part of it. So probably we're looking to, it can be a share buyback or it can be dividend, but it's something at the board level that we are contemplating how we can manage that. It will be, in our case, we can put the plumbing in place, but it will mostly more, so we finance the buyback of the last tranche of New Afton with a prepay for 100, and we draw our revolver for 150. So we need to pay this. So we'll be more positioned probably to take action in 2026. But it's something that we're looking at because it's important for sure.
Yeah, and you've been moving a lot quicker here. I mean, for investors looking at New Gold today, for instance, what are those key milestones? What does the next 6 to 12 months look like for a runway?
First, we need to deliver our production. Guidance is critical for us because it's something that is to walk the talk. Second thing too is we have exploration, so we'll do an update on exploration in probably in the beginning of September, because we massively invest, so we have to. And after that, our expectation is we want to produce indicated resource for Key Zone for the end of the year, so it's an important milestone for us. We will ramp up C Zone at 16,000 tons per day for the end of the year, so it will next step going forward. And also we expect to extend the mine life at Rainy River also a bit this year. So it will be a year after year, Rainy River.
Yeah. Execute. All right, Pat Godin, CEO and President of New Gold, joining us now at the conference.
Thank you.
My friend.
Thank you very
nice to
much.
meet you.
It's a pleasure.
And thank you for watching. I'm Jeremy Saffron here at the wonderful mining investment event of the North in Quebec City. We're going to have some great guests coming up all week long, so make sure to hit follow, subscribe. We'll see you next time.
Kitco Mining's special coverage of the Mining Investment Event of the North is brought to you by West Red Lake Gold Mines